Welcome back to Primary Source China Investment. This week, Pengguo and I are on show T6, and we're continuing our trend of talking about trade. And this week, it's trade with China and India. While we certainly suggest going into a deep dive between the China-India history, such as the transmission of Buddhism to China 2,500 years ago, it's the modern relationship since the 1950s to the present day that concerns trade. And without a full dissertation on Kashmir, Tibet, or the Dalai Lama, it's the broader conflicts between these two nuclear-armed countries in the Galwan Valley that killed 20 Indians and 4 Chinese soldiers in 2020 that fundamentally altered the relationship, prompting India to reassess its China policy. And this brings us to trade, where India would like to reduce its reliance on imports from China, but that's proving very difficult. China, in fact, took the top spot from the US as India's largest trading partner in fiscal year 2023 by the slightest of margins. India's bilateral trade with China totaled $118.4 billion during this recent fiscal year, with imports rising 3.24% to $101.7 billion and exports increasing by 8.7% to $16.67 billion. Yeah, these are a lot of numbers we're throwing at you, but this creates a huge trade deficit. And in fact, India has a trade deficit with 9 of its top trading partners. The only partner it has a surplus with is the US. So Pengguo, I'm gonna stop right there because I don't want to throw too many numbers at people. But the reality is China is still an export nation. India is sitting back and saying, well, wait a minute, is there something we can do to reverse this type of trend? And what's your thought?
India worry about the trade deficits is pretty much from the India side, but really those trade deficits is naturally grown. So based on both countries' consumptions, nobody forces them to import some products.
Exactly.
The major point is India import a lot of the products from China and export to the Western countries. That is probably a very important way for them to make the money. For example, in the pharmacy area, China is reliable to provide the low price materials, so they can make a lot of money in export the medicine globally. And also what China export to India is most likely the manufactured products, chemical products, common metals, and other consumer products.
Yeah.
China import include the minerals as well as some other raw materials. So it's pretty much not too many products that will be attractive to China, except some of the raw materials. And also for the India, they have a demand in many areas for the China products.
Yeah, the biggest areas, right? We can also say the electrical machinery, equipment, nuclear reactors, boilers, machinery, medical appliances, organic chemicals, like you said, for the production of pharmaceuticals. But
yeah,
like
people really get a benefit from those like the daily consumptions.
Absolutely. So what India wants to do, what a lot of countries want to do, is move up the value chain, right? Why am I only importing raw material? Why can't I create these raw materials? These are the kind of questions that the Ministry of Trade in India is asking. Like a lot of other countries, they want to increase their own manufacturing capabilities and serve their local market. So through that, India's doing some stuff. What are they doing? So India signed 14 trade agreements. Some are expected to have some short-term benefits and some are longer-term benefits. And they're hoping that these free trade agreements will increase investment. And it's happening. India's also looking towards Taiwanese tech companies like everybody, and it's seeking to boost semiconductor manufacturing sector with ASEAN nations for manufacturing facilities. India's increasing economic engagement with the West underlies its intent to ensure that China's position as its top trading nation for 23-24 fiscal year was an aberration and doesn't become the norm. And this goes to the heart of this, the global South or the BRICS or something like that. You have the second largest name in BRICS, India, thinking long and hard about how to diversify their trading and their partnerships.
Yeah, that's so if they really want to improve entire the industry, so that really means that their government and their business environment get improved. So as we all know, all the major companies they suffer the Indian government as well as local business environment for a very long time, and pretty much I never heard any big company can avoid it. Like the China, they have the Xiaomi cell phone company. They lose probably billions dollars in the India, and which is simply cause nobody in China want an investment in India right now. That is we can see the number get a investment number get a direct investment significantly dropped in the past 2 years.
Yeah, so India is trying to do things that countries do. They have incentivizing domestic manufacturer. They're providing some sort of free trade zone, looking to develop new industries, specifically semiconductor and electric vehicles. I mean, they're probably late to the game there, but that doesn't mean they're not going to follow the West's tariffs on Chinese vehicles, right? So, these trading blocks are emerging. We're in a trade war. Let's just be very obvious about it. There's a trade war going on. There was, recently this train deal in Bulgaria or something like this that the EU is looking at. So time and time again, countries are stepping up and saying, we need to protect our own manufacturers. And I don't necessarily think that's a good idea, but that's the state of the world right now.
That's true. So that really means right now we can see the original whatever political conflicts, and it's really become the extra cost for all the for majority of the companies in the world. Hopefully, they can find some solution rather than make things get worse.
Yeah, I don't think I don't. Maybe India can build things cheaper than China, but certainly there are places that will not be able to build cheaper. So, trade changes, and you bring up this geopolitical issue also. India is strengthening its ties with the U.S. and its allies to contain China's growing influence. This is like what we've talked about in the past, the Quad and AUKUS, and last month India just sold a bunch of cruise missiles to the Philippines. So, there is this sort of passive war that's happening underneath the trade war. It's this geopolitical repositioning, and that's real. So we don't want to minimize that.
I think people really need to get the one big baseline. So all the major country, if they solve the problem, that's the absolute number one reason is their internal problem. And so never ever point the finger to the outside. That's if from history, that's definitely is true. So they can see a lot of the outside factors or the infect them, but it's really their internal problem. So that's if we say from this perspective, like if the fund get a big problem, investment managers say, "Oh, this is not my problem. It's a market problem. It's outside the competitor's problem. I'm not to be responsible for that. I still get my salary. I still get my bonus, or I can change another position and to still take the fund manager." Do you think that makes sense? Absolutely not.
Yeah, there are definitely internal issues and external issues. So, we do share some spaces on this globe. So we definitely need to have cooler heads when we are stepping on each other's toes. So we're going to leave it with show T6. Thanks for tuning in. We'll be back next week with another show. Until then, see you then.
Thank you.